The IPO. You've definitely heard of it, the initial public offering. It's this incredible moment when a private company basically steps out onto the world's biggest stage. It's how they go from a small startup to a household name that you see traded on the stock market. Think of it like a corporate coming-of-age story. And today, we are pulling back that curtain to show you exactly how it all goes down. Right? We hear this phrase all the time. So-and-so is going public, especially with those giant tech companies we all use. But what is actually happening behind the scenes? What does it really mean for a private company to decide to offer its shares to, well, the whole world? Okay, so at its absolute core, an IPO is kind of like a company's graduation day. Seriously. It's that moment it goes from being privately owned, by a handful of founders and early investors, to being publicly owned by pretty much anyone, from huge investment funds to everyday people like you and me. Now, this is not a simple decision. The whole IPO process is incredibly long, it's super expensive, and it is seriously demanding. So you gotta ask the big question, why would any company put itself through all that trouble? What's the massive payoff they're all chasing? Well, it really boils down to three main drivers. First, and this is the big one, raising a massive amount of cash to just pour fuel on the fire. We're talking new factories, expanding around the globe, or funding some game-changing research. Second is something called liquidity. This is the magic moment when those early investors and longtime employees can finally sell their shares and cash in on all their hard work. And third, let's be honest, it's about prestige. Getting your company's name listed on the New York Stock Exchange or the Nasdaq. That is a huge stamp of approval. But here's the thing, going public isn't like flipping a switch. Not at all. It is a carefully planned, heavily regulated journey. You could even call it a gauntlet that the company has no choice but to run through. So the whole process kicks off when they hire these powerful investment banks to basically act as their guides. They're called underwriters. Then comes a mountain of paperwork, specifically this document called the S-1. And let me tell you, this thing spills all the beans. It lays out the company's financials, their strategies, all their biggest risks for anyone to see. After that, the executives hit the road for what's called a roadshow, pitching their company to big money investors to build up hype and demand. And then finally, the night before the big day, they set that all-important offer price.
And this is the climax. This is where all that intense preparation pays off. To really get a feel for how launch day works, let's just walk through a quick hypothetical example together.
So, let's meet our company. We'll call them ConnectFlow. Imagine they're a really successful private software company, and after a decade of grinding and growing like crazy, they've decided, you know what? It's time. It's time to go public. And they have a very clear, very ambitious goal. They want to raise $1 billion to fund their global expansion. And to do that, their plan is to sell 100 million shares of their company to the public. Okay, so after weeks on that roadshow, the underwriters and ConnectFlow, they figured out what the demand is, and they set the final offer price, $10 per share. Now, this is kind of the insider price. It's the price that the big institutional investors who committed early get to pay. And if you do the math, 100 million shares at $10 each gets the company its $1 billion. Perfect. But then, the next morning, the opening bell rings. The stock officially starts trading on the open market, and public demand is just massive. So the very first trade doesn't happen at $10. Nope, it happens at $15 per share. That immediate jump is what Wall Street calls the IPO pop, a 50% surge from its offer price to its very first trade. For ConnectFlow and its early backers, this is a fantastic sign. It signals a super successful launch and shows that the public is incredibly excited about their company. So the launch was a huge success, but an IPO isn't just about one exciting, crazy day of trading. It actually marks a fundamental change in the company's entire DNA. Just look at this transformation. Before, ConnectFlow was owned by a small, exclusive group, and their shares were illiquid. You couldn't just sell them easily. Now it's owned by the public, and its shares trade freely every single day. And that 50% pop we just talked about, that instantly changed the company's total value, what we call its market cap, from a pre-IPO valuation of $10 billion to a staggering $15 billion, literally overnight. So, the result is exactly what they hoped for. ConnectFlow successfully raised the $1 billion they needed to grow. They hit their goal, and they stepped into the massive spotlight of the public markets, a completely changed company. So, let's get this straight. The IPO was a huge win for the company and its early investors, no doubt about it. But what about all those new public investors? The people who bought in at $15 a share, right at the peak of all that hype. What does this journey look like from their side of the trade? Well, that is a fantastic question, and a story for another explainer.